All right, we're just going to wait here for a few people to come in. Is there anybody streaming in yet, Nick, before Matt and I launch into this episode here? We'll wait a few minutes, Matt. You're going to go and you're all settled back in from vacation, I see.
Yeah, got a little chapped lips and sunburned forehead and peeling shoulders.
That's awesome. Yeah, no doubt.
You reach that age where you don't need sunscreen anymore.
My wife wants me to put it on in the winter, even when I go out. Like, she's religious about putting it on every single day, right?
Yeah.
I'm not.
I was raised on a lake in southeastern North Carolina, and I grew up with no suntan lotion. And I keep waiting. One of these days, I'm just going to pop up with like, "You are a giant skin cancer."
Yeah, I definitely go to the dermatologist every year. What do you got? Okay. All right, we got some people in, Matt, so we'll start. Hey, this is Materials Exchange, the MX Broadcasting Network, episode 16 of Lunch with Lumbermen with Matt Lehman for the Lehman's Lumber Guide. If you want to see this show recorded, we are live on the MX Materials Exchange LinkedIn and YouTube platform, and also on the YouTube, the Lumber channel. That's real easy to go to. You just go to the Lumber channel, and all these are restreamed on that one. Because we've had a lot of people, Matt, call me. We had two or three of your users sent me emails over the last few days saying, "Hey, I can't make it. I'm on vacation. Do you record these?" Right? Which is cool. A lot of people go back and look at these right afterwards, right? Had a guy tell me yesterday or 2 days ago, I leave you guys on in the background, kind of like CNBC, to listen, just to kind of listen to it. And when I hear something exciting, I turn around and listen to it, right? So
let's keep that in reminder. We need to say something to get people's attention to turn them away from CNBC.
Yeah, well, no doubt. Well, they leave us on like it, he said in the background. They leave like our show on to listen to it instead of having that on, which, hey, the actual goal is to have a full-time channel going all the time with lumber, right? So let's jump right into the FDP, the 12-month, and take a look at that. And then, as you said before we started, we'll go right from this one, and we'll talk a little bit about volatility. So, Matt? What are we seeing since we met 7 days ago on here? What's changed? What do you think here?
Well, the market's definitely losing some downside momentum, and which is typical when you're coming into the next FTP, which is at week 31. I did have on here earlier a little shadowed area that showed week 28 through 31 was going to be kind of a slowing momentum period, but it just got it's too much to show. So the point I wanted to make was that when these FTPs are showing up, that the time to play these FTPs or trade them is a couple of weeks before, because those are times when the momentum should shift and start to go in the other direction. So if you're trying to wait for the last minute, there's going to be less product available. There's going to be less counterability at the mill. And right now, I believe, is a perfect time to try to firm up your bids and make some offers while there's still ample wood available and mills are negotiable. Don't worry about hitting the bottom. My suggestion was to actually buy through the first or second week of November, so you can be prepared to be run out of lumber around the end of October and have enough wood to not have to be panic buying around the end of October, but just start your fill-in buying for the winter. And if you can't buy from now to the end of October, if you have a 6-week, 8-week inventory that you like to carry, then just get that far out. Buy that 8 weeks out and just keep adding to it until you reach the end of October, the first week of November, and then start to liquidate.
So, Matt, how's this chart going to look next week when we meet again? We're going to have a little uptick now on that blue bar?
No.
Okay. I got you.
I don't think so. There's a lot of noise. We talked about the conversations that are going on in the market. Spruce is probably going to be higher. I was listening to what Matt Bamer had to say yesterday, and even though there's a lot of turning signals in the market, he's still got wood to sell. I heard this morning from Canfor that they're down, but they've got quick cars. The guy told me he did 2 EFPs this morning with Canfor, and they're shipping today. And they're shut down, so they've got wood on the ground to still.
So let's get back. Are they actually shut down? I don't know. Or are they talking about shutting down?
They said they're shut down. I don't know when the start date was. They said they were going to completely shut down all Canadian operations.
Yeah. we're gonna have to dig into that a little deeper, right, to see what the actual what the statement is. I didn't really read it that much. I'll have to go back and read it because
it just said they were going to shut down for indefinitely, I think, at all operations because of the fires and smoke. And I heard also that Telco and Interfor are entertaining the same kind of strategy, and that kind of propelled futures to be limited up again for an expanded limit. So we're up $100 in futures, which now is about $175 premium to cash.
Yeah, well, let's look at the cash traded at $400 to $450 the night before those announcements were made. So if you looked at that spread that night, we were all sitting around here going, somebody must know something because the cash where it's trading at and what that spread is too high. But all right, so let's look at your volatility. I love to talk about that because that's a chart or a item we never brought up yet. So
this midweek briefing report comes out on Wednesday nights, and actually the reason this here is just not enough room in the other publication without stretching it longer. But this is pretty cool because it shows you, if you look at the very last column, the VI column, that is the volatility index.
Yeah.
Typical volatility for lumber is whatever the current asking price is about the range that the lumber is going to trade in over a year.
Yeah.
For example, if you see Southern Yellow Pine at $500 on the left-hand column over there, then the assumption is, or the average is, that the normal volatility for the course of 52 weeks is going to be $500 of price changes, either up or down, and up and down. And we see right now that the 52-week total volatility is $2,900. So the volatility over the last 52 weeks for Southern Pine has been 6.12 times its annual volatility. And if you look all the way down at the bottom, you can see where the average of all composite, all the lumber items and the OSB items is 5.07. That tells us that the volatility of the lumber market is 5 times its normal volatility, or it's tracking along at a 5-year volatility average.
Yeah,
it's 1 year the same volatility we normally see in 5 years.
Yeah, we were on the phone with some hedge funds this week and some private equity, and they were asking us about like the volatility. Like they're like, what happens if the volatility comes out? I'm like, well, if our volatility, I told them, got cut in half, there'd still be plenty of volatility. Right.
I really, we talked about yesterday. I listened to your conversation with Matt and Greg, and you're talking about, who's to blame, or is there blame to be cast? And I really think that the volatility in this market is 100% on the shoulders of the CME, because when you have the futures contract that can trade $126 a thousand in being $63 in both directions each day, and it's done that. It's traded $126 in a day. And when you have lumber futures that are trading at $100 volatility in a day, it just opens the door wide open for the cash market to follow along. It just expands the rules of flexibility, and I think the CME made a huge mistake by making these limits expanded. And if you only have a $10 or $15 limit, and that's all you can do in a day, that just changes the parameters. It's not going to go. It won't go 6 or 7 or 8 or 10 days in a row limit. It'll just narrow the trading range. So I'm lobbying for smaller limits.
You know what? You go back to 1990 or 91 though, when it was a $5 limit during the spotted owl crisis, it locked like 30 days in a row because it was so tight.
Yeah, and that was at the beginning of. I'm not going to make excuses for it, but that was one of our first big major disruptions in the lumber market.
It really was. I remember because my dad still had the lumber yard, and he couldn't believe that they were doing that with the spotted owl, right? But remember, it was a $5. I think I'm probably off a little bit, and it locked so many times they had to go to the committee and finally expand it to $10, and that was a big kerfluffle, right?
Yeah.
But yeah, so hey, let's go into some of your points that we talked about on your Wednesday one, because you kind of hit a lot of points I wanted to chat about. The first one, inflation. What's your thought there? It's not transitory.
Well, we talked about lumber. The Fed's been talking about, and talking heads on CNBC and everywhere, been talking about transitory inflation. And there's nothing to really indicate that inflation is transitory, because prices are there's just a lot of volatility. But we still have not, in the housing market and not even in the lumber market, have seen price rejection. We just saw, I mean, the home builders started reeling in their order files just because they were just having a difficult time getting things covered, felt like they were leaving money on the table. So we talked about this 2 months before it happened, that if the home builders started reeling in order files, the media was going to take it as a slowing in the housing market, just because they were just not ordering out for 6 months or 8 months or 10 months. And what you and I have uncovered over the last week or so is there's a lot of wood in reloads that's got those orders covered, and that wood's already bought, and those orders are covered for months ahead.
Yeah.
So I think the inflation is still there. It's not transitory. It's just lumber's just peeled off because it just got overbought and overcovered grossly, and it's which leads me to believe another one of the other points was that we're back to 1.7 million housing starts, and we talked at the beginning of the year the numbers of 1.3 completions and 1.7 starts. There was a dichotomy there that just couldn't continue, but it's obvious that there's enough lumber to start 1.7 million homes, because we've been doing it for off and on for 6 months now. And here we are 7 months into the year, and all of a sudden there's plenty of lumber, and we're still clicking along with 1.7 million starts. So it indicates to me that there's plenty of lumber supply, and OSB is still the outlier because it's still trying to catch up. But from a lumber supply perspective, it appears that there's plenty of lumber to build 1.7 million, and with somewhere between 5 to 7 new mills coming on next year, I think we're going to be in a way overproduced capacity for lumber.
Yeah. And one quick question, Matt. Judy was asking, do you feel and have the ability to see pricing on the MX will combat some of the CME panic? I don't know if there's really a panic on the CME, but I think what the difference will be is ours shows more what the spot market is doing. The CME shows more of a forward market on a very specific item, which is 2x4 out of Prince George, BC area, right? They have a very small
one item
that they're quoting, right? And I got my theory to why the CME moves the way it does sometimes. There's about 7 people in our industry that trade that a lot, and then they push their information out to these different nodes and get everybody to push information out to those nodes, right? And it's not a very heavily traded contract when you look at the volume, but that's why I think the volatility moves so fast. And I think over time, volatility gets mitigated when the price is just kind of the bid and ask comes in. But yeah, Judy, I think that the ability to see the spot market certainly has an availability for the simple reason of this. When more people in the chain, I'm talking builders that are building stuff that were 3 or 4 times removed from the mills, can see what the real pricing is. It takes away some of their panic that they hear, kind of like when we're kids and we used to play that cup in the string method. They put a wax string on 2 tin cans or pass the message around when you had a table of 10 people and you tell a message. By the time it gets to the 10th person, it's so discombobulated from what the first one was. So what MX really does is it allows people so far down in different nodes that never had the ability to find out what the real pricing was closer to the market. For instance, we had a new person on here last week, actually 30 miles from here. First time they've ever bought, not from one of their bigger yards, bought studs at $3.50 when they were getting quoted $7 on full trucks. Never knew they had the ability to do that. So I'm thinking that their level of panic went down when they saw that actually being able to get more price relief quicker. So that's a long answer to a question, I think.
Well, I think another thing that the MX does that people don't realize too is they realize how many people handle the product between the mill and themselves. If they're, it's certainly one of the things I've realized about what MX so far, it's not for everybody. It's not, if you're a company that needs terms, if you need 30-day billing, that kind of thing, it's really only for those guys that are well-heeled, well-funded. You got to be able to pay for your product when you get it. So if you're one of those marginal companies that are using your wholesaler as a banker, it's not going to work for you. But if you're like a developer on the front end of the money cycle, you can buy carloads or truckloads and send them to reloads and really save a lot of money just by eliminating. And I'm not trying to cut anybody out of any business, but a lot of times there's people just handling lumber in the middle of a transaction just because people don't know the pecking order of how to go about getting it. And it's really, that has a lot to do with making prices as high as they are when they get to the builder.
Yep. Yep, no doubt about that. Let's go. I lost my train of thought here real quick. Let's go to mortgages and interest rates. Matt, you had a comment about mortgage applications are falling.
I just keep watching that, and that number comes out every week, but it seems like more weeks than not, applications are falling, and most mortgage applications right now are refis anyway. I did something this morning. I hit a button that said, a little pop-up ad that said mortgage rates as low as 1.79%. So I just said, I hit the button, want more information, and I swear it wasn't 15 seconds and my phone was ringing. I got 30 phone calls in about a half an hour.
Yeah, I've done that before.
Refi my finance, my mortgage, but there's plenty. There appears to be plenty of money available in the financing side of business. So there's plenty of cash available, which is going to keep interest rates down. Interest rates just can't seem to go up, and regardless of inflation, the Fed doesn't want higher interest rate because it just increases their debt payment. So I think the in favor of housing is lower interest rates, and there's plenty of it available because they're not getting overdone, not getting overwhelmed with mortgage applications. Look,
housing still to me is just it feels solid still, but there was a little bit of a hiccup in permits. But we brought up the housing data that you have. What's your feeling on the housing side of things, Matt?
Well, I think starts now is kind of the focus, because starts is what we're actually doing. Permits should be lower because we knew that builders are trying to reel in that order file. So naturally permits are going to be slower because they just don't want to, they want to slow down a little bit.
Yeah.
And completions are slower because it's not because of lumber, it's because of appliances and fixtures and carpet and, all kinds of stuff is stuck on boats off the ports. And
one thing that did open up, I heard, this is just what we heard from a user yesterday on the call, that the engineered lumber is starting to open up and ship a little bit more freely now, which is good, right?
Yeah, so is OSB. And I think we're going to see OSB catch up with lumber with a couple. In my commentary, I actually cut off the last line. If you look up, it says something about OSB over the next couple of weeks. I think we're going to see OSB come off in a couple of chunks of $200 and be down $400 or $500 by the time lumber starts to spin at week 31. Because it's just typically what happens is there's so many contracts. We talked about this before. Mills have 80% of their wood on contracts, so they need to sell 20%, so they're able to hang on to those order files at the top of the market and just string out those prices at the top and take advantage of people that have contracts.
So I saw your interesting thing on home centers are in a funk. I mean, I think I agree with you that home center business will get better. And again, I've heard people say it's as low as 80% off on the lumber side of what it was at its peak, right? That's just a number somebody threw out. The other interesting thing, without giving any names, these home centers have min maxes that they're supposed to take. And some of them supposedly aren't even taking some of their mins right now, whether that's true or not. Now some of them want to renegotiate their pricing for next year today at these numbers. So I guess what we talked about, if you heard on our call yesterday, is I think maybe mills could rethink. They cut everything and they kind of cater everything to cut for that type of business. And when the market rolls over and that business disappears and isn't there to support them, you get these wild ranges and volatility. That's one of the ways it happens, right?
Yeah, and what's happening right now is just as much a fluke as last year's shortage of lumber. This year business is not necessarily bad. It's just been, if you think about the priorities of what people are doing with their money, last year priorities were turned to DIY just because they couldn't go on vacations. After, you used to go on a vacation every year of your life and take your family away and get out of town and relax, and nobody could go. I've heard folks this year even taking 2 vacations to kind of make up for it. But I still think even those families that are taking two vacations are going to come home and say, well, we still got some cash to spend, so let's expand the deck, or let's. I mean, everybody that wanted a deck didn't build a deck last year because it got so expensive and tight.
So Matt, it's kind of funny, a lumber story that I had a buddy that went to that inland outing last week in Coeur d'Alene.
Mm-hmm.
And he said, people hadn't got together in 2 years. He goes, it was a complete blowout, an absolute blast, because people had been away from other human beings for so long. Like they landed on the airplane there and were ready to just have a good old time, right?
Yeah.
So it's people want to get out and do stuff, right? Here's an interesting one. And I talked to a few reloads this week, mentioned that yesterday, and it'll segue into where you say component plants are well booked and well bought. Paul, a few reloads, and heck, you and I talked about it. A couple of them are like, I'm on the phone with them, like, we are full. You can maybe call us in 90 days. And we've got a lot of non-traditional people that have never put wooden reloads before using our facility, right? So I think a lot of the wood got bought on the way down for people for third and fourth quarter multifamily and other business that they didn't want to, hedge it or whatever. They were like, we're going to buy this, put it on the ground and have it, right?
Right. There's a lot of that going on right now. Still, people buying projects for next year. I was talking to a group yesterday that's a developer, builder, owner, kind of framer, the whole package kind of thing, and they were talking about lumber prices. And I showed them the exchange. They were in Memphis. I said, let me just show you. I said, I don't even know what you're paying for your lumber. Let me just show you what your options are.
Yeah.
And the numbers on the exchange were $300 better than what they were getting quoted. And I said, and I hate to tell you that, I said, that's not as good as you can buy it. That's just, that's the ask price. Cause I keep encouraging everybody that's on the exchange, that's on the bid side. Like if you're waiting for the mills to show you their best number, that's not going to happen. You're going to have to offer something that they can, the mill can sneak in and take and not disclose that it was them. So it's still a secretive kind of business model when you think about what happens at bottoms and tops of markets. And
yeah, no doubt. What was this? I wasn't sure. You said China developers are signaling a housing bubble. That's new to me.
I saw this yesterday. There was 14 of the 15 top developers, real estate developers, are they're in default on their loans, and they're all in the billions of dollars. There's only one out of the 15, and it was probably the second largest one, but the largest developer in China was in default. And the analyst was saying that he expects that there's going to be a 40 to 50% reduction in home prices in China because the developers are just going to have to be dumping their inventory just to be able to get slick on their defaults. And if China goes into a recessionary or deflationary period for housing, that's going to have a worldwide effect. It's going to be good. So I think it's just something to keep in mind, that things aren't particularly rosy everywhere when you start to find little things like 14 of the 15 top builders are in default, and that kind of turns your head a little bit.
No doubt. Well, let's jump over real quick to some of the different charts. Let's look at Southern Yellow Pine first on your up on your chart on your FDP. So pine, the interesting thing I saw, Matt, and I heard this from a couple other people on YouTube. One of them is a guy called the Uneducated Economist. He does some good stuff. And he had a cool one. He was like, so he goes, if you go into like some of these stores, and I looked, I started calling, there's some Southern Yellow Pine treated that's cheaper than its counterpart in the whitewood market at some of these home centers now. You know what I'm saying? Like
it should be. You guys bought this wood back in January. They overstocked before the market started to run. So it's conceivable that, for home centers might be in a bad position for their inventory, but for their price, they're not. They're in a very good position. For sure.
Yeah, no, that's a great point. And the other thing there too is just Southern Yellow Pine in general, for every non-treater buyer, there's some still great. I haven't seen pine move as much. There's a lot of really good deals out there still on the pine side.
I was on the road yesterday making a little road trip to see my dad, and I saw. I always look when I'm riding down the interstate, 77 and 95 and 85 and 485 and all between the Charlotte and Raleigh area up and down the corridors going north and south. I saw more lumber on the road yesterday, and I bet you 75% of it was treated lumber. And I thought, well, I wonder if that stuff that's been sitting around for a while, and I passed the truck and looked to see it. It was all bright, fresh lumber, and it was new orders that were going out. So the independents are not overloaded on treated. The independents are the ones that were able to not. And so those guys are still buying.
You brought up a good point the other day too. When I think 2 weeks ago, when a user asked, "Hey, I'm not seeing the price relief where I'm buying from," and I think your point was, and I brought this point up to somebody yesterday. I'm like, well, why don't you expand your reach and try to talk to some of the independent yards even farther away that may have turned their inventory faster that can provide you with a different price or a different opportunity? Did that make sense, Matt?
Yeah, actually, I was talking to a dealer in South Carolina, a contractor yard, and he said he had on Monday his biggest day ever. I mean, count all of last year, everything's happened this year. In the middle of a down market, a downturn, he'd had his biggest day ever. And the reason was that he was able to flip his inventory quicker and get his prices down. He was outpricing all of the boxes, the large contractor yards, and he wasn't doing anything abnormal. It was just like his price was just better. They were having to price off of their costs, and he was priced off his costs. And he said he was getting covered up. So that's a brilliant.
Well, it makes sense, right? Because a lot of these bigger locations get in these big, they increase their contracts so much they load up. I mean, the reason we went to $1,700, $1,000 is because people bought a lot of inventory, right? But a guy like that who's still an independent, he's writing the checks. If he's wrong, he pays for it, right? Personally, he was able to go ahead and, earns and turns work, right? And he turned his inventory over as a lower price. Now people are coming to him because he's probably given a better deal, right?
Yep, exactly.
Yeah, that's cool. Let's go to your framing, or actually real quick, we talked spruce enough. Let's go over to OSB and take a look at that. Because what we noticed on the platform, we had up to 80 trucks the other day, and we were shipping trucks from, the Midwest over to Colorado and going all over again because there's price discovery in OSB right now, right? Which is great. We actually had a dealer that hadn't been on in 2 or 3 months called yesterday and said, "Hey, can I get my password again? I think I want to sell some of my OSB." Right? So it's, when you're, and I'm going to be awful, but when your cost of production is somewhere between 150 and 200 on panel products, and they're still selling at 1,000, you've got some negotiation ability in there, right?
Yeah, and the volume of it, the volume of availability is really going to come out in the next couple of weeks because the mills are getting to the place where they're inside storage, where it's kind of like you look at an OSB factory plant is like one big plant, storage and everything's on the inside, and it's all got to be inside storage. So they've been going along here for like 6 weeks now, just building inventory, not selling. They're selling about 80% of their capacity just for contracts. But they've been slowly building inventory, and those walls are getting full.
Here's the one thing I really noticed on the Materials Exchange platform, Matt, is OSB, right? Because when you think about it, OSB is the most commoditized commodity item, right? It's like corn. Yes, some people want it out of the north, some people want it out of the south, but it had such a tight distribution chain that everybody owned it like this, and they didn't want to, you had to go through this guy to get to this gal to get to this guy. That's just the way it always was. Well, now we see OSB flowing in areas all over the place where we're finally having to go to some people and say, "Hey, you sold it out of this location, but we're going to drive by 7 other locations. Do you want to just take it out of here?" Right? It was so, the chain was so owned before that now all of a sudden when traditional buyers can sell back into the market where they couldn't before, and sellers now have opportunities to sell to more people than they ever had, it's amazing to see the price discovery that we watch every day on Materials Exchange on an item like OSB. And it makes sense, right?
Yeah, it's the liquidity from just non-existent to, and like you're going to see, it's everywhere. But I think the next couple of weeks, particularly, it's good to see that price discovery is going to really Actually, I saw what I was gonna say. I saw somebody offer yesterday on the exchange 273 delivered for a 7/16 OSB.
I don't know what that one was. I don't know if I saw it. It may have been or somebody may have been bidding that.
Yeah, that's somebody was bidding it. So
yeah. So one of the interesting things about the OSB, it still has liquidity at these numbers.
Yeah.
I mean, which I guess is a testament to building and everything, because there's liquidity. But it has liquidity for two reasons, because we're also sending it to non-traditional places that some stuff never shipped to. We shipped one all the way out of South Carolina up to Buffalo, New York, or two of them, right? It's just the flows are all odd. All right, well, cool. Let's go to the framing index, then we'll finish it up a little bit here. So what was the big changes in the framing index this week?
Well, it's probably small because we saw the Southern Pine was a little bit soft. It wasn't softer, but it was less of a drop. The SPF was flat. OSB was a little bit off, so it's probably the smallest drop we've seen in several weeks. So I think it's showing that we're losing some downside momentum, and we should be preparing for a reversal.
Yeah. And look, if we think about it, the numbers that we came from on some items and where we're at now are historical, right? So, I mean, at some point, you can only go to zero, right? Somebody told me that one time. Unless you're trading oil or 2 years ago, right? Yeah, I think business is still really good. I mean, outtake is really good. There's little nuances here and there. There are disruptions because of obviously some tragic things going on with fires. We hope everybody stays safe there. But we have a big inventory build at some places still that people are working through. So a lot of moving parts, which is a good reason why everybody should come to this show every Thursday with Matt and I and talk about it, because volatility means the news and the stories change and are as volatile as the pricing. And we're trying to stay on top of it. But so we're up against our half hour. Come to mxlumber.com and sign up. And Matt's at the Layman's Lumber Guide. You can get a hold of Matt at Layman's Lumber Guide. And Matt has a really great following. We're glad to have him on the show. And he does a superb job. And if you ever want to sign up for any of his classes or get any of his get involved with any of your consulting, make sure you get a hold of Matt at Layman's Lumber Guide. There's the information below where everybody can see it. So I appreciate everybody showing up. I have a fun time doing this, Matt. I hope you are too, because I think it's helping out. So everybody have a great weekend, and we'll look forward to talking to you next Thursday.
Good. Y'all have a good weekend.